Hello, I welcome you all to AE Accounting Tutorials. If you haven't subscribed to my channel, kindly click on the subscribe button on your devices, okay? Today we are going to look at final accounts of a sole trader, how sole traders prepare their final account at the end of the period. But in part 1 of this video, we look at how sole traders prepare their trading profit or loss account, that is the income statement. But in this particular section, we are going to look at how sole traders prepare their balance sheet or statement of financial position. Is that okay? So we are going to look at the format, how sole traders prepare it. But note, the preparation of the statement of financial position, it is actually based on the accounting equation. We use the accounting equation to prepare the statement of financial position. But basically, we have about 3 models as far as the accounting equation concerned. So you'll be looking at the 3 models, but you'll be using only one of the model in the preparation of the statement of financial position. Is that okay? So first of all, let's look at the format, then we consider the model. You can see that for the statement of financial position, I have used assets, okay? But for income statement, we use for the year ended. So that is the difference. Is that okay? So we use assets the end of the year in which the sole trader is preparing his accounts. As I said it earlier on, we have about 3 models that we can use to prepare the statement of financial position. So let's consider the models. So we have assets is equal to capital plus liabilities. Okay, that is asset is equal to capital plus liability. This model, we call it the total asset model. That is the first model. Okay, so we'll be calling this model the total asset model. The total asset model. So we can still expand this accounting equation. Is that okay? So when we talk of assets, we are saying that the asset is the economic resources that the sole trader uses in his operation. Okay, the economic resources, all the economic resources that the sole trader uses in the operation of his business. But the assets, we have 2 broad classification of the assets. Is that okay? Because you will not just send the accounting equation just roll like this to the preparation of the income statement, but then you will be expanding it. Okay, so let's actually expand the equation. So with the assets, we have the non-current assets and we have also the current assets. So the combination of these 2 form the assets. Is that okay? With the non-current assets, they are those assets that the sole trader uses in the business for more than 1 financial year. Is that okay? They only help to assist the business to move on. And the current assets, they are those assets that the sole trader enjoys within 1 financial year. Is that okay? So after that, you look at the capital. So the capital is giving us the capital plus the net profit minus any drawing. This capital is the owner's equity or the capital, the initial capital, the capital the sole trader introduced into the business. So with the capital or the owner's equity is the capital itself plus any net profit or net loss ascertained in the income statement. And if there is any drawings, then we less it. Is that okay? After that, then we consider our liabilities. And the liability, we have the non-current liability and the current liabilities. The non-current liabilities are those obligations that the sole trader need to pay off or more than 1 financial year. So sometimes we call them the long-term liabilities. Is that okay? So they are the financial obligations that the sole trader pays off to outsiders for more than a year. Is that okay? More than 1 financial year. And the current liability too is the obligations that sole traders pay to outsiders within 1 financial year. Okay, so basically this is the total assets model. But then when we go to the statement of financial position, we are going to present something like this. But then with this first model, we can have another second model from this. Okay, the second model is the net current asset model. The net current asset model. With the net current asset model, we will still maintain our assets, okay? We maintain our non-current assets. Then, because it is a net current, you will be taking the current liability from the current asset. So you will be having plus the current asset. Sorry, this is current asset. So current asset minus, we bring this here to become minus. So current liability this way. After that, we create it to the capital, which is the capital plus net profit minus drawings. Is that okay? After that, it's left with the non-current liability. So this model is called the net current asset or the working capital model. Is that okay? Or the net current asset model. So it is this model that you'll be using in the preparation of the statement of financial position. So you have to write this formula somewhere. We will be using it in the preparation of the final account. And we have another model too, where capital is equal to the assets minus liabilities. Okay, we can still express this equation to where we'll be having the owner's equity or the capital plus any net profit or loss minus drawings. Is that okay? After that, we have the non-current assets plus the current assets minus the non-current liability plus the current liabilities. But before that, you have to know the items that constitute into this, okay? When we talk of the non-current assets, I've already explained. So, for instance, motor vehicles, furniture and fittings, buildings forms under the non-current asset, okay? And the current asset too, I've already explained. So, example, we have the stock, the trade debtors, and cash, bank, and any other items, okay? But the stock I'm talking about is the closing inventory. And then the current liability may be the trade creditors, maybe expenses, owings, and any other thing, or bank overdraft. So with the capital, is the capital the sole trader introduced into the business. The net profit is what we've ascertained from the income statement. The drawings are the, maybe some amount of stock that the sole proprietor may decided to withdraw from the business. And the non-current asset may also be there may be a 3-year bank loan and those stuff. Is that okay? So let's quickly consider the format itself. But then we are using the second approach, which is the net current asset approach. And the third model too is the that is the asset model, the total asset model. Net asset model. Sorry, the net asset model. That is the third model. Is that okay? But we will be considering the second model in the preparation. So the second model, so keep it somewhere. So we will start with, let me first of all write the equation somewhere so that we will be following the equation. We say that a non-current asset plus the current, the non-current asset plus the current asset minus the current liabilities is equal to the capital plus net profit minus drawings. After that, we add our non-current liability. So this is the formula we are going to use. That is the net current asset model or the working capital model. So we start with the non-current asset. Bring my currency sign. Okay. So let's say the non-current asset, the sole trader is using building, maybe motor van, motor vehicle. The non-current asset may be more. So what happens is that we record our costs over here, the accumulated depreciation, and the carrying amount or the net book value. We have the cost the accumulated depreciation, then the net book value in that order. So let's say the cost of the asset is here. We take our accumulated depreciation or depreciation from the cost, then we arrive at our net book value or the carrying amount. After that, you sum it up. After the non-current assets, we are following this approach. Is that okay? Then we consider the current assets too. With the current asset, we are having the closing inventory. The closing inventory. We take debtors, trade receivables or debtors. But let me talk about the trade debtors a bit, okay? With the trade debtors, anytime there is a current provision on trade debtors, that is the provision that is being found in the additional information, you need to take the current provision from the debtors figure before you present it. Or anytime there is a bad debt to be written off that is being found in the additional information, you need to also take it from the debtors figure before you present the amount, okay? So sometimes there will be provision for bad debts. When I talk of provision for bad debts, I'm referring to the provision that is being found in the additional information. So you have your debtors amount less the provision, okay? Then you get your actual trade receivables. But mind you, anytime there is a bad debt to be written off, you take it from the debtors figure before you calculate your provision for bad debts on it. Is that okay? After that, we consider bank. Bring your bank balance. If there is any cash balance, you also bring it. But sometimes the proprietor may decide to make drawings of his cash. If that happens, you have to take the cash drawings from the cash amount before you actually present it. Is that okay? And if there is any expenses prepaid to you, add it. So any expenses prepaid, you add it. If there is any income accrued or income due, you add it. Let's say that is all, then we sum it up. After that, we are following the format, so we are going to less our current liabilities. So we have less current liabilities. With the current liabilities, let's say we only have trade creditors. There may be other items that may be found here. Items like income prepaid, expenses owings, all will come here. Okay, but I'm only considering trade creditors. Then what will happen is that let me add one item. Let's say expenses due. Is that okay? So the two items will come here. Bring the two items in the first CD sign. Then the total of these two will come here. The total of the current liabilities. So we are going to take the total of the current liability from the current assets as the formula is over here. So this amount will give us the working capital of the firm. Working capital. The working capital. When I talk of working capital, that is the capital the business or the sole trader used to run his day-to-day activities of the business. Is that okay? So after we've gotten our working capital from here, we add it back to our non-current assets. Okay. Now we've gotten this. What you get here is the working capital. Then we add it back to the non-current asset over here. So the amount we will get, we call it the net current asset. That is why I said this model is the net current asset model. So this is one of the balance. So let me actually continue from. As I said, I'll be continuing from here. We are going to look at how the sole trader finances his business. So we'll be looking at financed by how he finances his business. So we are at this place, okay, the right hand side of the equation. So we have capital, then we record the capital, okay, and if there is any net profit, we add it. So add net profit, okay. After we've added net profit, we will get an amount, okay. Then we less our drawings. If there is any drawings, then we less the drawings. Okay, so we less our drawings. Anytime an amount is in bracket, it means we are subtracting. Okay, so you get an amount here. After that, we consider the non-current liabilities. Non-current liability. The liability or non-current liabilities, sorry. Liabilities. Okay, so let's consider bank loan. They record the non-current liability over here. So when we add the non-current liability to the total of capital and net profit, you will get an amount over here. And this amount, we call it capital employed. So the capital employed is the money the sole trader employed in the business. Is that okay? So your capital employed should be equal to your total net assets. Okay, so this is how the statement of financial position format looks like. Is that okay? But then if you haven't subscribed to my channel, kindly click on the subscribe button on your screen, okay, and also comment, like and share this video for the benefit of others. Until we meet again, bye for now.